Minerals Supply Challenges. It's a pleasure having Craig Hutton today with us. Craig is a very experienced professional and executive in the mining industry. Good afternoon, Craig.
Armando, nice to be with you.
Excellent. Craig has a book we'll publish with the post. The link of this book is publishing now. Craig, countries with high technologies are very dependent on minerals that normally are produced outside these countries, in other continents. So my point for you, please, what do you consider the critical issues on the supply side facing miners?
So, Armando, I mean, that's a really big question, and it's broad. The reality is it's really complex given today's economy. The big push today, as we all know, is clearly that we have to go green. And then enter this mix of having to go green, which in and of itself is a significant challenge for miners. We're going to do the transition, and we're going to go from fossil fuels to renewables. And just in that equation, there are many, many challenges. But I was reading an article the other day, which I could make available to you and your viewers, by a professor in Australia who quantified how much metal that the world's going to need to transition to green metals, and the number is quite staggering. It's at least 40 times what the world currently produces. For instance, there's some commentators that suggest that in the next 26 years, we're going to mine, or we're going to consume more copper than has been produced in the history of copper mining. So that's the one side in terms of supply chain, is the ability of the mining industry just to meet the aspirations of transitioning. But I think what is less appreciated is, having made that decision, obviously now we have the interplays now with Russia. We have supply chain issues because of COVID and many other moving parts. And, so those overlay, some of the challenges. But I think what's coming out of, what's happening with the war in the Ukraine is we have significant power challenges. So power is becoming a number one key risk in the industry. And when you overlay that in terms of the staggering amounts of metal that have to be produced, we can't produce them without reliable power sources. So that's the one. The other sort of, key, challenge, it's actually skilled people in mining. Now, for some reason, mining is a dirty byword to a lot of the youngsters today. And, we are finding it harder and harder, one, to attract people into the mining industry, which is critical. And then secondly, train up those youngsters and hand over the knowledge base that we've had. So, right now, given the myriad of, different impacts that are happening, those are the two key ones. But then, in addition to that is, those are almost the sort of knowns, and, we could go through and I could tell you, water is going to become an issue, supply chain in terms of, in a timely way, getting material to the mines, and many mines are remote. Those are easy actually to identify. I think it's things that we haven't identified that are going to come back and hurt us. I'll give you an example. I read an article just 2 days ago about sulfuric acid and how there's going to be a significant shortage of sulfuric acid. And despite the fact that there's a lot of, brines, etc., we get a lot of our sulfuric acid from oil and gas. And if we're moving away from oil and gas, then what's going to replace that? And it'll come at a higher cost, clearly. So, for instance, the world consumes about 250 million tons of sulfuric acid a year. The projections are to meet the transition metals requirement, that is going to go up to about 400 million tons a year. And that's really something that it really took me by surprise. I sort of sat up and thought, I'd never thought about something as, essentially insignificant as sulfuric acid. And clearly the mining industry uses a lot of sulfuric acid. So I think to answer you, it's some of those challenges are unknown or unidentified, known but probably unidentified, and probably less appreciated by the broader community in terms of the challenges we're facing on the supply chain.
Let me extend I have three questions for you. This is the first one. I would like to ask something in this first one. How much do you believe in the energy transition timeline? How is being shown to us? You believe that we have enough minerals to maintain this transformation of energy situation in the world?
So, I think the timelines have been set by politicians, and I worry that there wasn't a lot of thought given to the realities of the transition. I'm slowly being convinced that, in fact, the 2030 deadlines will simply not be met because there's just not enough metal. And again, this comes back to the supply side. I was reading an article the other day which informs this view, is that the world needs over 300 new mines to come online, in the near term to supply the demand. It takes, and again, retail investors and the community at large don't understand how long it takes to bring a mine in production. It can take anything from 5 to 20 years to bring a new mine. Yeah. And we don't have 300 mines that should be online in the next 3 years that aren't. So, just by force of, how many projects are going to be turned into productive mines, I think there's the problem. Of course, and I said to you, some of the key issues, around that is, what we're finding is, falling grades. The deposits are becoming much more complex. And then the quality of the material. So, and when I talk about quality, I've got a bit of trading background as well. And I don't mean quality in terms of falling grade, we mentioned that, but there's deleterious material. For instance, there's a high proportion of copper that's coming with arsenic. And so, when we talk about green and sustainability, we have this headwind that mining is bad, but we're going to have to do more mining. And then what's happening at the same time is we've got, issues around ESG, social license to operate. There are many hurdles that we have to navigate in order to do that. So, Armando, I think, when I weigh up all of these headwinds and the counterbalancing issues, I certainly think it's a challenge too far. And I think the world would probably be better advised to have a good look at that and really try to understand what those timeframes are. And one last comment on that is, I think, China and India clearly have said, look, 2030 is not something they can sign up to. And they're looking at 2015 at the earliest, but at the end. So, I do think, we have to look at reality, very, very hard. And, I don't know that if politicians have the courage to stand up and say, look, we won't make it, but I can tell you, from what I'm reading is, we won't make the 2030 deadline. Simply there won't be enough metal.
Yeah, perfect. The point of view of regulation, legislation, the environment, let's see, with good conditions to investments, to supply side investments. How do you see? We have a good situation at this time in the world and your country, and how do you see my country, Brazil, in the same question?
Yeah, look, I think, what I've seen, in terms of sort of the investment climate, again, this is a mixed bag of goodies, if you wish. So, we're seeing, Chile and Peru, they have kind of gone the sort of socialist route, believing that socialism is going to correct things. I think, capitalism is a bad word for the moment, but I think capitalism is the philosophy that has brought us to the level of standards that we enjoy today, and not socialism or Marxism. I mean, they've got a terrible track record because it comes down to property ownership. And fundamentally, if investors are going to invest, they want to know that there is property rights. And without property rights, people are not going to invest in your country. So I think, countries have to be very careful in terms of what political persuasion they adopt and what the implications are, to the business community. And, as I was saying previously, the world has a great need for metals. And if you're making the environment investor and friendly, capital is a coward. Capital just will not invest. And so we're already seeing, for instance, in Chile, production rates are dropping off. And, it's arguably people will say, well, it's too early to blame the politics, and it has a lot to do with the falling grades. And I accept that. But I do think over the next 5 years, you'll probably see quite a quick fall off with property rights, on it. And then, of course, the other one is, when you go down the socialist route, governments believe it's their duty then to put higher rents on the profits of miners. And, the strange thing is when miners are battling, there are no subsidies, but when miners are doing really well and, the bubble's there, then, governments believe that they need to come in and redistribute that wealth. And so, investors then look and say, look, mining in and of itself requires a special type of investor. It's an investor who has a very, very high appetite for risk, but is also very patient. Because as I said to you, when you get to the sort of, you've defined your ore body and you're ready to pull the trigger and you want to build a mine, that can take anything from 12 months if it's small. If it's larger, you're putting in billions, and it can take up to 5 years. And in that time, you're shelling out billions of US dollars. There is no dividend. You've got to be patient. And then what happens is once you get into production, government come and say, we're going to, take all your profits because it's not fair that, the community doesn't. So it imperils things like jobs and GDP. So, it's a very difficult phase that we're going into, and it's really difficult, certainly for me, Armando, to kind of give, sort of clear advice or opinion, because I just see, at the moment the world's in a very horrible state of flux, and the politicians seem to be quite divorced from reality.
Yeah. Very, very separated from reality. Yeah, that's true. That's true. But the big ones, the big companies in the mining sector, I mean, majors, BHP, Vale, and other similars of that, they have enough money in cash, or they need banks to finance this, let's see, exploration and development of fields of minerals.
Yeah, look, certainly, the bigger companies have strong balance sheets, but again, investors after the last 2013 down cycle were demanding healthy dividend repayments, and so what you've seen is that miners, instead of building up cash piles, have been distributing that money back to their shareholders in the first instance. And then secondly, we've seen a lot of buybacks, as prices have been rising. Glencore, for instance, has been aggressively doing buybacks, and, that keeps their share price up. And then, of course, the accountants will get in and say, well, you don't want to fund everything yourself. You want to use your balance sheet, and you want to bring on some debt because you get obviously financial leverage. I've seen quite horrifically that there's some miners out there that, they have debt equity ratios of 1-to-1. And so that's really good when prices are rising. But when prices start to soften, and then particularly today, we're seeing rising interest rates, that then really hurts the balance sheet. So yes, these big organizations do go to banks, and they do service it. I mean, you can see on the balance sheet, there's clearly a portion. But again, there was an article recently that I read in terms of credit expansion, or rather credit contraction. And, banks are lending up to 10 times their book. And so, if there's a contraction, and it looks like, the bankers are getting really nervous, if there is a contraction, there's going to be less money on the debt side to invest. And so here's the challenge. Have miners built up sufficient reserves to go and build those 300 mines? I don't think the mining industry and even a collective, take the top 50 companies reported by PwC. I don't believe they have the sufficient funds to be building the 300 mines.
Yeah.
And then, debt is going to become less attractive because interest rates are so high. And then, of course, it's priced because the bankers are clearly going to want to manage their risk on it. So yeah, I think when you're looking, your question was, do the bigger miners lend or loan? Yes, they loan, but I think that space is going to become very tough in the next presumably 3 years. For as long as inflation is running high, bonds are going to be high, and miners are really, I think, going to be looking around to try and really understand how they're going to be financing these projects, or there won't be projects coming online.
Yeah, that's right. Craig, how do you see China dominance in minerals processing? I know that the source of minerals are everywhere in the world, but the processing is very dominated by China nowadays, no? And how do you see that? And do you see other parts of the world investing hardly in terms of capacity to process minerals? I mean minerals to become a part of the renewables investments.
So, I mean, clearly, China has dominance, and particularly what China did 20 years ago, they made a strategic decision as a nation to build smelters.
Impressive.
And isn't this interesting? In the West, we have this climate paranoia, frankly.
Yeah.
And to have built smelters was just not right. And so, we outsourced all of that to China. And so China has now become the dominant beneficiary of metals. And in addition, China was very, very clever in terms of looking at the global map quite strategically. So they own 70% of the production capacity in the DRC, particularly cobalt. 70% of the cobalt mined is controlled by China. And then China clearly takes all of that material and they send it to China, and obviously the beneficiation, they sell it back, to the West. Now the West years ago thought they were clever because they were outsourcing, and China was a lot cheaper to be processing. But I think the world has pretty much swung around now and have allowed China to be dominant. And China is not shy to flex the dominance muscle. So I think the West is clearly, as now with the energy transition, are looking at the coal-fired power stations because they have to. The reality is, if you don't start up these coal-fired power stations, you're going to have a lot of your populace go coal in the winter. The West is really going to have to kind of think about these supply chains, and they're going to have to think about smelting capacity if they're ever going to compete with China. And so again, how long does it take to build a smelter? It'll, I know of one that has, taken about 6 years to build from scratch because their size.
Wow.
Yeah.
It's similar to oil and gas projects, very long term. That's to construct the infrastructure. Yeah, impressive.
Yeah,
6 years.
If you're buying concentrate, you're going to push through 320,000 tons of concentrate a month. Those are massive plants. They also need power. And as we're going towards renewables, the discussion is now really coming to the fore. There's a healthy debate, I think, particularly on social media, that I think it escapes mainstream media. It's probably not sufficiently discussed in boards. I think boards are quite timid at the moment, not speaking up. But certainly on social media, there's a very healthy discussion around renewables and whether they can actually supply baseload. Of course, there's differences and divergence of opinion, but if we're going to compete against China, then we're going to have to think about our energy mix. Now, China continues to build coal-fired power stations, and they're not shy to announce it. India as well, building coal power stations. So I think you mentioned China, but I think watch carefully India. India is a rising power. I think they may well have beaten China already in terms of population numbers. They have nuclear power, they get nuclear bombs. They've got a formidable army, and they've got a consumer base. So, those two dominant countries with what collectively that'd be almost 3 billion people, really have the industrial base, which the West has surrendered. So it's going to be an interesting decade to see how the West is going
Yeah, that's right.
to compete. And of course, the other that escapes the conversation and the debate, which I think should be debated more robustly, is that China controls about 90% of the renewable energy product. So PVs and
It's impressive.
absolutely. So really, the West has become beholden on China. Now, how the West is going to be able to navigate that, I don't have the answers for, or particularly insights, because I think the West is not a single entity like China with a single totalitarian government. We live in sort of mixed economies and divergent political systems, and in all of that, we have to make decisions quite quickly, and yet we still have to have the debates. So. Yes, I think China will take advantage of essentially what I think they would regard as a weakness in the West.
Yeah. Okay, let's go to the last point, please, Craig. You mentioned paranoia, CO2 paranoia or transition paranoia, but do you see that the market, the world is reacting rationally in this, let's see, minerals, sources, supply for the energy transition? How do you see the rationality that we are having or not in the world?
Well, Amanda, I think markets are typically irrational.
Yeah, that's right.
I don't know that markets are ever rational. And they talk about the invisible hand. So in the midst of all the irrationality, the way free markets work and should work is, there's price discovery, and price discovery drives decisions. In the context of all that I've said, and obviously in the midst of, as my view is, climate paranoia. Let me just qualify one thing for your viewers in case they think I'm a rabid sort of far right conservative, which is not and I don't believe that we should transition. Yes, I think we can all agree on things like we all want a better world, a less polluted world. These big power stations and smelters, etc., they extrude emissions into the atmosphere, and less about worrying about climate change. It's actually really bad for the inhabitants. I mean, take years ago when you saw the smog and the pollution in Chinese cities, not a healthy thing at all. And what did China do?
It's a serious problem.
Yeah, but what did China do? China addressed it in a very rational way. The West tried to outsource their sins to China and giving China the dominance. So in terms of the debate and in terms of rationality, I think that there isn't a debate yet that is robust. I don't think the politicians want to invite robust debate and rational debate. Politicians' lifespan is 5 to 10 years. It's all about clinging to power, and so if you have people challenging you and they deem that you're challenging where they want to take the conversation. And pretty much in today's modern world in the West, one is silenced, and I don't think that's healthy. But I am encouraged that more and more thinking people on social media, seriously minded people, and particularly on LinkedIn, which I have a number of followers on LinkedIn. I'm closing on 18,000 followers. And so I get to see a lot of information, and I get to see the debates. And what is really encouraging to answer your question about the rationality of the debate is that emerging, I think, is people challenging the status quo in terms of, folks, can we achieve the goals that you're setting? And the consensus that I see emerging is no, we're not going to meet those deadlines, and therefore there's a rational debate that's going to need to happen quite quickly for the West.
Perfect. Thank you so much for this nice conversation, Craig Hutton. It was a pleasure for me. Thank you so much. And do not forget to send the email or via LinkedIn the book link to be published in the post.
My pleasure. I certainly will send the link to the book, and I do hope your listeners, if they're interested in economics, it's entitled Money Economics Explained. There's 25 years of very deep experience on that, and so certainly I will do that. Thank you, Armando, for inviting me onto your show.
It was a pleasure. Thank you. Have a good day. Bye bye.
Bye bye. Thank you.